Ever wondered what makes growth stocks so enticing to investors worldwide? Here's a hint. It's all about the thrill of potentially high returns and the exhilaration of investing in companies that are at the cutting edge of innovation. These are the companies that are pushing boundaries, disrupting industries, and shaping the future. And guess what? This video is your roadmap to understanding growth stocks, finding where they are, and knowing just when to invest. So buckle up and get ready to dive into the world of growth stocks. First off, what exactly are growth stocks? Well, growth stocks are shares issued by companies expected to grow at an above-average rate compared to other companies in the market or their industry. Think of them as the high achievers of the stock world. These companies are often on the cutting edge of innovation, constantly pushing boundaries and reshaping industries. Now, instead of paying dividends, these companies typically reinvest their earnings. That means they're using their profits to expand their operations, develop new products or services, and increase their market share. They're like the ambitious entrepreneur constantly seeking to grow their business. This reinvestment is a key characteristic of growth stocks and one of the reasons they're so appealing to investors. After all, who doesn't love the idea of being part of a company's success story? Now that you know what growth stocks are, let's move on to how you can invest in them. So, you're interested in investing in growth stocks, but where do you start? Well, let's dive right in. To invest in growth stocks, it's important to identify companies with strong growth potential. But how do you do that? Fundamental analysis is your best ally here. It involves assessing a company's financial health and market position. You'll want to look at factors such as revenue growth and earnings growth. Is the company increasing its sales? Is it making more profit year over year? But don't stop there. Consider the company's market opportunity and competitive advantage. Is it operating in a growing market? Does it have a unique product or service that sets it apart from competitors? And don't forget about industry trends. Is the company in an industry that's on the upswing? With these tips, you're well on your way to making a savvy investment in growth stocks. Now, where do you find these growth stocks, and when is the best time to invest? Let's break it down. Firstly, finding growth stocks isn't like hunting for buried treasure. They're scattered across various industries, especially those known for rapid innovation and technological advancement. We're talking about sectors like technology, healthcare, biotech, even consumer discretionary. Now, on to timing. While there's no perfect watch for this, certain periods can be more advantageous than others. Think economic expansion, technological innovation, or when specific industries ride the wave of rapid growth. These are the golden moments when growth stocks tend to shine. But remember, investing in growth stocks is not a sprint. It's a marathon. The true potential of these stocks may take time to materialize, so don the hat of patience and keep a long-term perspective. Armed with this knowledge, you'll be able to time your investments just right. So, we've covered a lot today. Let's quickly recap. Growth stocks are shares issued by companies that are expected to grow at a rate above the market average. These companies often operate in innovative sectors such as technology, healthcare, and biotech, focusing their earnings on expanding operations, creating new products, and increasing market share. Investing in these stocks involves identifying companies with strong growth potential. Fundamental analysis is a common tool for this, taking into account factors like revenue growth, earnings growth, market opportunity, competitive advantage, and industry trends. You can invest in individual companies or growth-oriented mutual funds or ETFs through a brokerage account. The right time to invest in growth stocks is often during periods of economic expansion, technological innovation, or when specific industries or companies are experiencing rapid growth. However, remember that growth investing requires a long-term perspective. While these stocks offer high growth potential, innovation, and portfolio diversification, they also come with their fair share of risks. They can be volatile, may trade at high valuation multiples, and if growth expectations are not met, significant price declines can occur. Calculating the growth of a stock can be done using the growth rate formula or by assessing the company's historical and projected earnings and revenue growth and analyst estimates. And that's a wrap. Now you're ready to venture into the world of growth stocks. Remember, every investment comes with risks. So, do your homework and make informed decisions. Leverage on bullbearvector.com to find the right stocks and options to invest, helping you to save time and reduce costly mistakes today. Happy investing!